Good afternoon and welcome to AROBS H1 2024 results call. My name is Susanna Kureg and I'm Investor Relations Manager at AROBS Transylvania Software, and I will moderate today's call. Before we begin, I would like to mention that this call is being recorded and that the recording of this call will be updated on AROBS website by tomorrow, the latest. As stated in the call invite, by joining the video conference, you automatically and implicitly consented to being recorded. If you do not consent to being recorded, please leave this call. Firstly, I would like to introduce you the management that is here with me today and will present the H1 2024 results of AROBS Transylvania Software. I am joined today by Wojciech Bran, Chief Executive Officer and Chairman of the Board, Bogdan Ciungradi, Chief Financial Officer, and Aurelian Deaconu, Executive Director, Software Services. In terms of organizational aspects, we will follow a standard call setup, which means the management will deliver a presentation outlining the results for the first half of 2024, and later we'll have a Q&A session. Please note that all the participants have to be on mute. If you would like to ask a question, please type it in the chat box. Feel free to do so during the call, and we will address the questions in chronological order as soon as the presentation of the management is over. Last but not least, as usual, I would like to mention that we might be making forward-looking statements today during this call regarding the future performance of AROBS Transylvania Software, and that actual results may vary materially. We encourage you to review the disclaimer that we have included in this presentation, which is available on our website. This disclaimer applies equally to all the statements made in today's call. We are now done with the introductory part and we can kick off the call. I will now pass the floor to Wojciech Bran, who will share with you insights about AROBS Transylvania's software's performance in the first 6 months of 2024. Wojciech, please.
Hello everyone. I would like to thank you for being present at this conference. I would like to present, as you see in the title, navigating in the challenging context. That's how is the market right now. And I decided to present both challenges and opportunities. We see the decline in the global demand for software services, and there are some areas like automotive and electrification where we see a decline in the demand. Also, we see organizations reducing their technology budget and delaying the new projects. On the other side, I guess it's important to know that starting from last year, there was the elimination of tax benefits for the IT sector that significantly impact our H1 2024 result, especially because we took the burden of most of those taxes that appeared on our personnel. On the other side, there are different opportunities that I would like to underline. There are cybersecurity and artificial intelligence, and those opportunities they are in different stages. We are trying to add as much as possible to our existing customer to address both opportunities in cyber and artificial intelligence projects. On the other side, what we see is a development in the embedded in non-automotive sector, and especially this is related to other verticals like cleaning machines, or it can be washing equipment or different devices. On the other side, I would like to emphasize the share capital increase operation that was completed in July. Early July, that allows us through that capital increase to raise 28.7 million euro from investor in order to sustain the development of AROBS. I would like to emphasize those investors are specifically institutional investors, and among them there are pension funds and international financial institutions. In software services, because we would like to address all the three verticals where we have presence. Software services, it's the main pillar of the group, with representing 81% of total revenue, specifically 166 million lei. Despite the decline in the demand and delaying on some starting of the new projects, I would like to mention that we are investing with the existing customer and that we are exploring different verticals. As I mentioned previously, cybersecurity and artificial intelligence. On the other side, embedded development, it's a new area where we plan to use plenty of our embedded competence that we developed in the last 10 to 15 years, specifically for the automotive market. In the software product, this segment grew 12%, reaching 38 million RON, and continue to grow and generate EBITDA as expected, maintaining a double-digit growth rate. Plus, we have few integration of AI into the software product. Remember, in the software product, we have the fleet management, solution for HR, solution for Salesforce automation, and solution for travel, and all of them are bundled into the software product in this result. On the other side, integrated services impacted by seasonality and postponement of project. Mostly projects that are awarded or they are included in the PNRR, Plan for Resilience and Recovery, but the projects are delayed for Q3 and most probable Q4 2024. And just to mention, there are different platforms that where companies usually place the bidding, and those are sometimes unavailable in that specific area. So the seasonability and postponement of project is the main area in the integrated services that we will also mention. Good. Strategic measure that we took. One of the most and the difficult decision that we took was reduction of cost of management from the CEO, from my level to chief operating officers and department director and project coordinators, between 5 to 10% for all the areas where we saw reduction in the turnover and reduction in the profitability. On the other side, we defined core team inside the company, and our goal is to retain and maintain those best people in the company to add value and contribute directly to the company in the next period. Optimization and cost reduction from the bench mostly, or by training key personnel into the different technologies or different area of businesses is also one of the measures that we took. The acquisitions we completed in the past have proven successful, and integration process is going accordingly to plan, adding value to the overall group. As objectives for H2 2024, I would like to address the objective to enhance the presence in the US. We have in mind the creation of VP of sales position to expand the service and solution in the North American market. As of today, in the service area, US market accounted for maybe 20 to 25% of the total 166 million RON. And there is a market that we would like to address further. We also want to develop and enhance the existing sales team in different geography where we have presence, like UK, where we have future workforce team, which have presence and can be enhanced with the existing people and projects that we have. On the other side, we are working on the strong pipeline of M&A target on both product and services, valuing the entrepreneurship and also with a good solid EBITDA and profitability. Also in that area, we are looking for projects and customer portfolio to enhance the value we generate for them. Few key indicators. Turnover, it's -6% versus H1 on 2023, which, by the way, was one of the best result in the history of the company, H1 2023. EBITDA-wise, we have a normalized EBITDA of 34 million, 16% margin, and normalized net profit of 16 million, 8% margin. With the non-normalized EBITDA and non-normalized profit mentioned. Just to mention that normalized EBITDA is only because of the shares that I offer to the company in order for the company to incorporate into the stock options plan project for the employee and key personnel. I guess that's about all. As an introduction, I would like to pass everything to Bogdan.
Thank you. Good afternoon, everybody. Now I'm presenting the financial performance of the group. In the first 6 months, the group consolidated turnover accounted for 206 million, which is -6% compared with 2023. This is driven by the decrease of 5% in the software services, but also by the decrease in the integrated systems revenues. As already mentioned by Voicu, this is more linked to the seasonality and postponement of bids and signing of projects in the public sector. I would like to underline the fact that having multiple pillars and verticals for revenue streams is helping us to balance the temporary decline in the software services, partially with the growth that we have in the software products. Looking at the profitability, normalized EBITDA is 34 million. It's decreasing. It's a decrease of 33%. The decrease is driven by the decrease in revenues. That it's impacting both EBITDA and net profit. One important thing related to the cost side, the share options programs impact in 2024 in the first half of the year is 20% less than in the first half of 2023, and our estimation for the full year 2024 is to have a 25% decrease in the expense compared with last year. Now looking at the performance on the companies acquired, compared also with the organic part, the group as it was before listing on the ARO market. First thing is that this year we have an acquisition which was completed at the end of May. It's the Infobest Group located in Timișoara and with operations also in Germany. Their financial performance is included in the consolidated results starting with 1st of June. So we have 1 month of performance also for the newcomer in our group. In terms of revenue contribution, the M&A companies contributed with 72 millions to the total turnover, which is 68 millions coming from the software services segment, which is plus 18% compared with last year, and 4.2 millions coming from software products, which is 75% increase compared with the last year. On the organic side, we saw a decline of 18%. Mainly it's due to delay in new projects and reductions of budgets, especially on the automotive vertical electrification area and some in the medical sector. Organic software products revenues increased by 8% in the first half of the year, and the integrated system, as mentioned, it's affected by the different seasonality in 2024 compared with 2023. Just to point out here that software services continues to be the main contributor with 81% contributing to the total turnover, and software products having an 18% contribution to the revenues in the first half of the year. Looking at each segment we have. First, we look at software services performance. Their revenues declined by 5%. On the cost side, it's an overall increase of 1.1 million, but which has two different causes. One is the increase in the cost brought by the companies acquired by the group. So it's the M&A companies that have brought an increase of 9.4 millions in the cost of sales for software services. But also we have a significant decrease of 8.3 million on the organic part of the business. One of the drivers for the cost increases, as we all know, the salary increase at the beginning of 24, driven by the elimination of the tax incentive for the IT people. The other costs decreased in line with the revenues year on year. We implemented some efficiency measures that generated a decrease of 5% in the cost of sales in Q2 2024 compared with Q1. So Q2 cost of sales is 5% less than the cost of sales of Q1. Software products performance was driven by the market growth. We took advantage of the way the market developed in areas like fleet management, but also in the business solution, including HR solutions. The contribution of the companies acquired to the revenues in the first half of this year was 4.2 millions, bringing a growth of 1.8 compared with last year. The cost of software products, the cost of sales for software products increased by 4 millions. It's mainly on the salaries and the third parties, subcontractors, and especially the cost on the salaries is coming from internalization of some software development and maintenance process. We want to have them more under our control. The companies acquired, besides the contribution to the increase in revenues, also have a contribution to the increase in cost of 0.9 million. Integrated systems, as we mentioned, it's different pattern and different seasonality. In 2023, the biggest project that we had was finalized in Q1. For this year, we expect to have the bigger project that we budgeted to be signed and at least partially delivered Q3, Q4 2024. Looking at the general and admin expenses, we had an increase in first half of the year of 1.4 million compared with last year. And this is coming mainly from the M&A activities and the cost brought by the companies acquired last year and this year. But we took measures and we tried to decrease the cost and not to follow the budgeted ones. The actual costs are significantly lower than what was budgeted for this year. Sales and marketing also increased by 1.8 million compared with H1 last year. And the main increase is coming from the companies that joined the group in Q2 last year and the beginning of this year. They brought a significant structure for sales and marketing together with the associated cost. Balance sheet. The balance sheet looks very strong. We have on the asset side, we have an increase of 15 million in goodwill coming from the acquisition of Infobest. On the other side, the total liabilities decreased by 1% while keeping a similar level of cash. The bank financing debt ratio, which is 1.05, shows a very strong financial position. And just to mention that the cash we have in the balance sheet as at the end of H1 is before the share capital increase, which was finalized in July 2024.
Thank you very much, Bogdan. This concludes the presentation of our results for the first half of 2024. We will now open the floor for questions. As I mentioned at the beginning, if you would like to ask a question, please type it in the chat box. For good order and for those of you who will be rewatching the recording of this call, we will be reading out loud all of the questions and the management will address them one by one. To give you some, I see some questions already came on the chat, but to give you more time to send your questions in, we will first address the questions we have received prior to this call from our analysts on email. The first question is the following. You wrote in your H1 2024 results, the operational results of the issuer can vary significantly from quarter to quarter and can be unpredictable. Still, can you provide us some tips for 2024 and beyond?
Really, we cannot provide tips. It's more like a forecast, I guess. So what we say usually we will come with an updated budget as soon as the things will be clear, and most likely it will be during the September, because especially after vacation we see new projects coming and also very intense movement in the market. So we will come with an updated budget if there is a need. For the time being, we'll maintain the budget despite what you saw in the situation.
The next question is, you mentioned a number of risks. Which of them are most probable to affect you?
Yes, indeed, there are several risks. I would say global slowdown. I would mention potential global slowdown, or the typical election in the US, which is sometimes mentioned by all the analysts. On the other side, coming back to Earth and to Romania, maybe the increased taxation that might come in order to recover the deficit. The fiscal deficit in Romania might be probably the biggest that might affect us for the next period. But as we see it right now, it will happen probably starting from next year.
Thank you, Voicu. The next question is, what are the tendencies in IT industry and how will you act accordingly?
Yes, indeed, there are different opportunities, but also threat in the IT industries. What we see right now, there is a trend of internalizing some of the services that were subcontracted. That's the area where we see some potential influences, I would say. There are also artificial intelligence. For the time being, it's not picking up, replacing all the developers, like all the news were at a certain point in the market. But one of the biggest opportunity we have right now, it's mostly related to the cybersecurity, because we see a lot of companies, including some of our customers, unfortunately, struggling with attacks and cyber attacks on all their entities, and we try to be extremely precise in our working procedures in order to avoid, first of all, to affect our customers through our presence, but on the other side, to help them to identify some of the issues and potential problems.
And the last question from this set, from this analyst is, do you intend other equity operations?
For the time being, no, it's not the case for the time being, but we'll let know the market or the interested party as soon as that will be a case. There is one of our objective on the other side was introduction into the BET index, and for the time being, we will try to follow the next revision in March in order to be included. And before that, we'll let know the market if there are any change in the shareholding structure.
Thank you, Voicu. We now move to the second set of questions from another analyst of ours. In view of the H1 2024 results, will you please give us updated revenues guidance for software services, previously RON 396 million, and integrated systems, previously RON 17.5 million?
Yes, the revenue for the software services indeed took a hit, I would say, in the H1. I will come with I will offer the same answer, specifically related to as soon as we'll know precisely that something significant will happen, we'll come to the market and adjust the budget accordingly.
Regarding your reduction of the bench in software services, what does this mean in terms of the headcount? You had an average of 1,216 employees in H1 2024, as well as an absolute cost saving. Will you be booking costs for redundancy payments to departing employees?
Yes, about this question, I will let Aurelian to come up with an answer.
Hello, everyone. First of all, I will take the opportunity to enlarge a bit the picture and to add a few flavors. Many of them, maybe they were touched previously by my colleagues. So in terms of adverse effects that we have faced for the first half of the year, I think by far the largest adverse effect comes from the automotive industry, where we can see all of us, the overall sales of the industry is going down. The electrification is undecided, so to say. And by far here we have the most adverse effect in the sense that many projects were delayed. Many strategic projects that previously were considered to be strategic are now postponed or stopped altogether. When it comes to the cost reduction, we have to think about what happened at the end of the previous year, where on a yearly personnel evaluation that in AROBS took part in the last part of the Q4 each year, we have had increases of salaries. On top of that, we have had tax increases coming from that elimination of tax incentives. So altogether, we have entered in 2024 with a posture where the cost, the personal cost, the salary costs were higher than previous year. With all this adverse effect that we have touched upon in this conference call, we do not want to lose the expertise that we have managed to acquire over the, let's say, past decade. So therefore, when it comes to the correlation between revenues and numbers of personnel, we are aiming to keep all the strategic knowledge that we have and to keep it with us. And that means cost, that means investment, because we hope that this temporary adverse effect will somehow diminish over the next maybe half a year, or maybe over the 2025, we are going to see a much more positive market. So it's going to be a correlation between the revenues and the numbers of personnel, but not a perfect correlation.
Thank you very much, Aurelian. The next question is, labor costs are now 49.8% of software services cost of goods sold. What over time is the optimal level that you target?
Here I would add together with the labor cost, I would also add subcontractors and stock options plan as impact on the cost. And here I would say the optimal factor that we see in the industries between I would say 66% to 70% of those costs.
Thank you. The next question, you brought down software services third-party costs in H1 2024 by 13%. The run rate over the past 4 quarters is around 16 to 18 million per quarter. Will you be increasing this over the next 12 to 18 months?
I'll let Aurelian to continue.
I think we have to use this contractor options, the option that we have by using contractors in our services to our customers as an elastic band. We can use that in terms of optimizing costs, but also providing us with the option of elasticity when the demand from our customers is going maybe up, maybe down. So I wouldn't have a specific target by reducing or by increasing that one. We are going to adapt in terms of the collaboration that we have with various contractors in terms of what demand we are going to face. Overall, I think it's good that we have that option. We are not, against that one. I would say that I would see more benefits than risk by using contractors in our, portfolio, so to say.
Thank you. You note there have been delays tapping European recovery and resilience funds, and to be fair, it is not uncommon. Once these projects have been funded, however, what run rate level of revenues in integrated services are you targeting for 2025-2026?
For the time being, we are going to stick with the budget. We see slight delays. We are bidding on various projects, and as soon as those will be awarded, we will present to the market. We run a pipeline, and we also have, we try to predict as much as possible the evolution. Going back to a previous question, we also see the integrated services delivering the potential, and as we are not talking about subway system in Cluj or other systems like this with big amount of money, we consider those will happen because they are important for the overall digitalization of those institutions on the Romanian level.
Thank you, Voicu. The next question is labor costs in the sales and marketing line was around 4.1 million in 2Q 2024, up from 3 million in 2Q 2023. Will you be maintaining the higher level for the next 12 to 18 months?
Yes, we'll continue to develop in different geography. We'll enhance the marketing and the sales activity on the specific geography and the specific vertical. As I mentioned, security, cybersecurity, as well as artificial intelligence are really important in our strategy and in order to develop, and those are in a big need of marketing and sales services.
Thank you. The next question is, how much, if any, room is there for reduction in G&A labor costs from the current level, excluding the announced 5 to 10% cuts in management compensation?
What we do is that we have a process of integrating all the companies within the group. And through this integration process, some of the functions are put together. And also we try to optimize the structure that we have. Also, we are preparing to be able to manage the next acquisitions, as we had the share capital increase that it was aimed to help us grow through M&A. So we need to have a solid structure that will be able to take over the new companies and manage them.
Thank you. And we have one more question from the set, also for Bogdan. Should we expect the same 28% effective tax rate booked in H1 2024 for the rest of the year?
According to our estimations, the effective tax rate would be somewhere between 26 to 28%, similar to what we had last year for the full year.
Thank you, Bogdan. We have now addressed all of the questions that we received prior to this conference from our analysts, and we will now move over to the questions on the chat. Again, if you have questions for the management, please type them in the chat window. The first question from the chat is, do you expect to complete other acquisitions in 2024? If so, can you give us an estimate of the considerations to be paid? What about 2025?
Yes, for 2024, as we mentioned in the capital increase, when we have the roadmap and in the prospect, we have a solid pipeline in the area, and we are expecting, based on completing the due diligence and other processes that are in place, to announce some acquisition in 2024. And as we mentioned, in both product and in services. So there is a solid pipeline. On the other side, as Bogdan mentioned, in the balance sheet, our debt to EBITDA ratio is about 1. So there is plenty of space for us to get more finance in order to finance those acquisitions. And about 2025, we'll see how many of them will complete during 2024 and how many will move to 2025. So there is a good pipeline, and there is a big interest also for us to continue acquisition process.
Thank you. The next question is, do you believe there is a risk of some of the integrated systems projects might lose financing due to delays, such as those financed via the National Recovery and Resilience Program?
Not as far as I know. to be honest. All the projects are ongoing, and we don't expect any major delay in any of the projects. And as I mentioned previously, we are not talking about hundreds of millions of projects. We are talking more about millions or tens of millions, bidding in the project.
Thank you. Considering the mentioned challenges, how this changes the allocation of proceeds from the recent share capital increase? Will the funds still be allocated mainly to M&A activity and not so much to working capital?
In terms of working capital, we have enough funds. As you saw, our balance sheet is at the end of June. So we have a strong balance sheet and we have a strong cash position. Allocation, maybe we will look at more opportunities on the product side if we see the slowdown in the software services will continue, or to expand to additional geographies. But still the directions are the same, maybe slight change in the allocations between those.
Thank you. Noting the mentioned personnel cost optimization, decrease of 5 to 10% of costs, do you envisage any further restructuring activities personnel-wise?
Invite Aurelian to.
Well, as a matter of principle, we are ready to adapt and to decrease further the cost if the market will present us with some more adverse effect. But as a matter of principle, we want strongly to keep the team as it is. We want to preserve the expertise. But if the negative impact will continue to be in our, balance in our P&L, for sure, we are ready to move ahead with more reductions in terms of the personnel, in terms of the cost of the personnel, in terms of the general administrative cost, and so on.
The next question is, how many new clients AROBS signed in 2024? It will be nice to let investors know when you sign new contracts and their value.
The value are not so significant. Usually we grow step by step with the customers. As I mentioned, generally we are talking about embedded. Some of the new customers are in the embedded in different other verticals than automotive. On the other side, about how many, I guess it's not so important at this moment because we are on the growing phase, exploration, and we try to adapt to each other. So far, what I can mention, the customers and customer satisfaction related to AROBS services, they are really high. And we prove them, existing customer and the new customers, we prove that we can deliver good results at the optimal delivery and price ratio. So as soon as as soon as there will be a significant customer joining the operation in any of the verticals, we let the market know. But as I mentioned, usually there is a slightly increase or exploration phase.
What is the current client concentration in software services revenue?
In terms of the geographies or in terms of the business verticals?
I think in terms of specific clients, how much the biggest client basically is bringing to the total turnover of the division.
There is no client that has more than 20% plus in terms of the revenue. So I think we have a very balanced and very well structured revenue base. In terms of the geographies, assuming that maybe that is some of the interest mentioned in the question, I would say 20 to 25% it's from the United States and North America, and the rest is from Europe.
Thank you. Could you quantify the negative impact of the tax benefit elimination on the margins?
On the related to the tax, to the impact on the margin, because of the mix of the people, I guess it was, and also the overlapping with the negotiation with the person, with individuals about increase at the end of last year, actually November. I cannot mention precisely, but it's in the area between 5 to 10%, I guess. That's what I see. If you want to be more specific.
If I may add to that, yes, Voico is right, but that was the impact for the previous year. If the project is, as the press was releasing those kind of news, is going to be eliminated, the remaining of the tax incentive, I would assume that the impact will be less, maybe, because it's just for the amount that exceed 10,000 lei, for the revenues that exceed 10,000 lei, which suggests that maybe the overall impact will be less than it used to be for the previous year. But at this current moment in time, it's very difficult to assess exactly, to put exactly an amount or a percent.
Thank you. The next question is, what are the key verticals that are the focus of the M&A pipeline, and what is the geographical footprint?
Mostly the pipeline are in our region, but also we explore different geography, and we gave mandate for at least 3 areas: US, Western Europe, and Southern Eastern Europe, I would say, precisely Turkey.
Thank you. Is there a room for synergies in terms of SG&A costs in the context of the accelerated M&A activity?
I think we already answered this one. It was previously asked. But
Yes.
just to say it again, it's we continuously optimize the cost with the companies that we acquire.
Thank you, Bogdan. The next question is, what is the approximate amount to be saved in the second half of 2024 from the 5 to 10% reduction in management costs?
I think it's for me that question, because the cost reduction was implemented especially for the software services, and that it's related to the management cost. I would estimate that overall it will be around 30 to 35,000, maybe more, on the monthly basis. Euros, yes.
Yeah. Thank you. What is the approximate reduction in the wage costs in the H2 2024 wage costs from the reduction in non-essential staff?
I guess that it can be a big debate what is essential, what is non-essential. As I mentioned already, the key personnel are really important for allowing us to grow in the future. And, the non-essential are usually, I would say, it's a big discussion about what is non-essential, but we try to actually retrain people on the project and on the verticals where we see. So I cannot forecast for the time being what is the approximately reduction on the wage cost. Will come as soon as we'll see the budget for Q3. Actually, we'll come up with more precise answer on those.
What I can add is that the saving that I mentioned on the cost of sales for the software services of 5%, the decreasing cost from Q1 to Q2, it will be preserved in the coming quarters also.
Thank you. And we have last question. I would like to, before I read it, I would like to kindly ask you if you have any remaining questions, please type them in the chat. Otherwise, we'll conclude this call after answering this question. Thank you. And the last question is, which are the companies acquired between 2022 and 2023 where costs have been optimized? And which are the companies that are yet to be integrated?
We optimized cost on all of the companies that we acquired in 2022, 2023. Those that are longer with us are, let's say, more integrated, both in terms of operations and in terms of back office. And for some of them, we plan to make a merger to bring them together with AROBS in the coming future. Those that are mature with us, some others will will be merged later.
Thank you very much, Bogdan. I see we have answered all of the questions, so we will close the floor for the questions here. And I would like to conclude this teleconference for the results for the first half of 2024. We will be publishing our next results for the Q3 2024 on 14th of November, and we'll hear each other at the next teleconference, which will take place on 18th of November. The hour will be announced as usual via current report published on the Bucharest Stock Exchange and on our website. And probably we will be meeting some of you later this week at the Woods conference in Bucharest, and we look forward to discussing further. In the meantime, as always, if you have any questions for the management and for the IR team, you can reach out to us at ir@arobsgroup.com. Thank you all very much for your attention, and we wish you a great evening.